This is AI Finance Daily. Here's something worth your next 5 minutes. The AS trade I regret most, and why I was too scared to make it. Regret. It's a feeling we all know too well. One moment stands out. The moment I hesitated on investing in artificial intelligence stocks back in late 2020. Sifting through the noise, it was clear that AI was becoming a pivotal technology. Yet the fear of missing the mark paralyzed my decision-making. In November 2020, AI-focused stocks surged. Nvidia, for instance, saw its stock price more than double within just months, soaring from about $135 to over $300 per share by April 2021. In hindsight, one crucial dynamic went unnoticed: the aggregation of demand for computing power, driven by advancements in AI. As companies across various industries began investing heavily in machine learning, the need for enhanced computational capabilities became paramount. Here's why this matters to you specifically: that missed opportunity had tangible financial implications. During that time, many investors were optimizing their portfolios around tech explosiveness, but I clung to hesitance, often waiting for the perfect moment. What I missed was that in tech, and particularly in transformative sectors like AI, waiting can often lead to significant loss. Delving deeper, the real structural friction I ignored was driven by FOMO, the fear of missing out. AI buzzwords dominated discussions, and stock picking felt overwhelming amid the hype. Tech giants like Microsoft and Google ramped up investments in AI, creating a reinforcing ecosystem that squeezed smaller players and bolstered incumbents. The number everyone missed is, according to McKinsey, AI adoption in enterprises more than doubled from 2020 to 2022. Enterprises that embraced AI solutions reported a 20 to 25% increase in productivity. Ignoring those signals led to a stagnant mindset. I let uncertainty dictate my choices, while concrete data showed a clear trajectory favoring AI investments. As I reflect, the assumptions I made were misguided. I prioritized a conservative approach, focusing on what I deemed as safe investments, thinking that volatile tech was a gamble too perilous during an economic rebound. However, what I should have realized is that the potential returns outweighed short-term risk. This is where conventional wisdom breaks. Investing in tech isn't always about stability. It's about recognizing when disruption can reshape the landscape entirely. As barriers to AI continue to lower, the players at the forefront benefit disproportionately. For example, while companies like Nvidia got ahead through its GPUs, my safe haven led to stagnation, while others thrived amidst transformation. The repercussions run deeper than just dollars. It's about missing the broader context. AI is reshaping industries, from healthcare to finance to supply chain management. The trends indicate a structural shift rather than a temporary spike. AI adoption is expected to increase by 42% per year from 2020 to 2027, showing a market projected to reach $732.7 billion by 2027. For investors, this realization is critical. If you hold a conservative stance or let fear dictate your choices, you risk stagnating not just returns, but your understanding of market dynamics. Adopting a growth mindset could lead to better investment strategies, and engaging with trends rather than running from them is essential. Going back to my personal regret, that moment of hesitation transformed into an opportunity lost. How can future investors learn from this? First, awareness of the aggregation dynamic is paramount. Understanding how markets and technologies can converge to amplify certain sectors is fundamental. Second, embrace a framework of agility. The modern market rewards those willing to take calculated risks. When evaluating your portfolio, ask, what structural shifts am I perceiving? Am I ignoring clear signals due to fear being the guiding force? One scenario is that AI could disrupt the status quo every few years. The incremental gains from a small stake taken early could lead to substantial long-term growth. Now, the AI landscape is continually evolving, but letting hesitation dictate action will lead to missed opportunities every time. To resolve this internal dilemma, commit to a specific decision-making process. Define your thresholds for engaging with new industries. Perhaps it's diversifying into AI-related stocks, or tracking benchmarks for early signs of disruption. Ultimately, this means recognizing your own biases. Regret can serve as a powerful teacher if you allow it to. It shapes not just investment choices, but broader life decisions. Emerging technologies like AI aren't merely a trend. They're a fundamental shift in how economies operate, and being part of that evolution can define your financial future. As you navigate these waters, ask yourself, what aspect of your investment strategy remains paused by indecision? And how might you pivot to capture the momentum that AI so vividly represents? That's AI Finance Daily for today. If this made you see something differently, share it with someone who needs to hear it.